All right, cool. Yeah, we got a bit of a mixed day today, but we're definitely doing better than we were a week ago. So let's kind of get into what is happening, why it's happening, so on and so forth. So before we get going, we could take a quick peek. It's kind of a mixed day in stocks, a little bit of green here and there, mostly green it looks like. Yeah, kind of all over the board. But let's go to the most important thing. Bitcoin is starting to move. We're at 72,366. So the most important thing here is that after the top, we had this massive cascading drop. We had a bit of a repeating pattern here where we kind of came back up. We tested support a couple times, came back up, went down through support, retested it, failed, and then just another giant cascade. It had me a bit nervous about a week ago when we did this call, is that we were breaking down underneath this. So we're now, last week at this call, we had just rejected it on the second when we just did this call. So we came back up, rejected it, and I thought, oh no, this is going to be like this all over again. And sure enough, quite the opposite, actually. We broke back up through, and now we're back up above the support. So we're back in the game, which is great. Now, something I want to talk about, which is kind of surprising to me. Let's dive into, of course, some of the most important things that are affecting crypto this week, which, of course, has to do with the war in Iran, so on and so forth. This blew my mind. Is Bitcoin a crucial aspect of the ceasefire between the US and Iran? The US and Iran agreed to a ceasefire earlier this week, contingent on a few conditions, including the Strait of Hormuz being reopened. Iran wants to be paid, get this, a tax of $1 per barrel of oil that goes through the gateway. That demand does not seem out of the ordinary. They're probably not going to get that demand, but Iran is demanding payment for Bitcoin for this tax, according to the Financial Times. That detail is potentially explosive if true. This would be the first time that warring countries would publicly agree or would be publicly agreeing to use Bitcoin as the key component of a peace deal. Now, of course, I'm doubtful that the U.S. is going to do that, but it's interesting it's even coming up in the conversation. If two countries don't trust each other, they can use Bitcoin to settle transactions of economic value. The U.S. has shown that the dollar can't be used for this purpose after the leading Western nation aggressively sanctioned Russia and its oligarchs after the invasion in Ukraine. So back in 2022, the U.S. kind of made a big move here, and we seized all the money that Russia had in the U.S. We seized a whole bunch of other assets the U.S. had. And basically, we kind of weaponized the US dollar. It was no longer, it really hasn't been in a long time, but they overtly basically made it a political tool where you cannot be using the US dollar and not be friendly with us. So that made a lot of people look at other alternatives. So gold is too difficult because the lack of portability and speed in a transaction. So basically, you couldn't have all these boats going through and do instant settlement quickly with gold, right? One other option would be to have used stablecoins, but those can be frozen, blocked, and confiscated as well. Because I'll talk a little bit about this here in just a moment during these slides. But stablecoins are still centrally controlled, right? They can be frozen, they can be stopped. They are not like an unstoppable thing like Bitcoin. So BitMEX founder Arthur Hayes eloquently wrote, "I'll believe Iran is charging a toll on Bitcoin when I see a transaction linked to a vessel's toll payment. Otherwise, it's just the IRGC trolling a Western filthy fiat financial system." So basically, he's calling the bluff. He doesn't think that they're actually going to do this. I don't think they're either. But it's worth saying that this is now a conversation. So, but regardless of whether the Iran government is actually accepting Bitcoin or not, the narrative has gone viral globally. And that may be the most important aspect of the story. Bitcoin is an idea whose time has come. Because on the same day the news broke of Bitcoin's role in the peace deal to end a war, Morgan Stanley launched their own Bitcoin ETF. They're a latecomer here, but they have dropped their fee to 0.14%, which is the lowest in the market. That means everybody else is going to have to lower or lose some market share. So the competition is on, right? I find it interesting that we're still getting barbell news in the Bitcoin industry. The traditional finance firms want Bitcoin to be a grown-up asset they can package and sell to their clients, while the most violent criminals and terrorists in the world are flocking to the asset as a last resort to solve their unique problems. It may be uncomfortable for people to recognize, but this is what true product market fit looks like. Bitcoin is attractive to different people for different reasons. I thought that was just fascinating to me. We'll see how it goes. But again, let's talk a little bit more about this and move on. So, I hate this too when it says Iran weighing crypto tolls. They're not weighing crypto tolls. They're weighing Bitcoin tolls. We need to stop using the word crypto when it needs to be Bitcoin. So this is now widely, reported on. So, quote, once the email arrives, this is how they would potentially do this. So the IRGC spokesperson would assess each ship using the waterway over a 2-week period to ensure it wasn't transporting weapons. Quote, once the email arrives and Iran completes its assessments, vessels are given a few seconds to pay in Bitcoin, ensuring they can't be traced or confiscated due to sanctions. Pretty interesting. Trump claimed on his Truth social media platform on Tuesday that the ceasefire deal included the suspension of bombing and attack Iran for a period of 2 weeks and the complete, immediate, safe opening of the Strait of Hormuz. In fact, when this happened, if we take a look at Brent crude, let's take a look at the hourly because this is pretty wild. Can you see on the chart where this announcement happened? It just gapped down from 102. You start seeing a little bit of noise about that. 106 just gapped all the way down to 92 and then dropped all the way down to 88 bucks a barrel. So just total collapse in the price of crude oil, which is a good thing. Now, of course, this is a very tenuous situation. So there's already been talk that the ceasefire has already been broken. Anyway, I won't get too much into that, but if this happens, we ramp right back up. So it's kind of worth mentioning there. Now, prior to the war, Iran still used crypto to bolster its currency. This was surprising to me. Not necessarily that they used Bitcoin, but that they used stablecoins, which seemed kind of dumb. Before the escalation of hostilities between the U.S. Israeli forces and Iran in February, reports suggest that Iran had been using digital assets to evade sanctions amid its currency, the rial dropping against the U.S. dollar. So blockchain analytics platform Elliptic reported in January that Iran's central bank acquired $500 million worth of Tether, which I thought was surprising because Tether can and often is frozen. You can just stop it, which tells me it's not decentralized. TRM Labs also tracked about 3.7 billion in total crypto flows in Iran between January and July of 2025. So these guys are already using crypto as well. Now let's talk Bitcoin and by further extension, the overall crypto market. So Bitcoin analysts say this must happen for Bitcoin to continue its price rising. One, we need to reclaim 80 grand as support. So Bitcoin's 8% climb over the last 3 days to 72 grand saw it reclaim key levels, including 200-day exponential moving average. So this is good. We want to see this thing moving up because if we go back to our Bitcoin chart, basically what we're saying here is that we need to reclaim, where are we? Right here. This little peak right here before we just fell off a complete and total cliff. Got to get there first, about halfway up to that 90 grand level. So let's continue on. There we go. So the bullish case for Bitcoin now hinges on cracking a sell wall between 72,000 and 73,000, where investors acquired 386,100 Bitcoin over the last 3 months. So a lot of people bought a lot of Bitcoin over the last 3 months between 72 and 73,000. And a lot of those people, now that they're back above water, they're going to try to exit a lot of those at break even. So there's a sell wall up to $73,000. It must break through the sell wall to continue rising to 75. So basically, in short, a lot of people bought a lot of coins thinking they hit the bottom. We kept bottoming, kept dropping out, and now a lot of people just want to go and get out at break even, which I think is kind of silly. So anyway, I guess that's more short-term traders than long-term investors, which is fine. Glassnode's risk indicator reveals another major resistance higher up between the true market mean at 78,000 and the short-term holder cost basis of around 80. So that's really where we need to go is the short-term holder basis, people who've held Bitcoin for less than 155 days and thus are the most sensitive to price movements. A lot of those guys are going to try to get out at 80,000 and just get out at break even. A lot of people are going to do that. So until price reclaims this level, the mid to long-term bias remains tilted to the downside as any rally into this zone is likely to encounter meaningful distribution pressure from recent buyers seeking to exit at or near break even. So this always kind of happens. On the way down, you get a lot of people who are either just I'm out selling, or people who are buying, but they don't hit the bottom, right? And so on the way back up, it takes a while often to ramp back up to higher levels because a lot of these people just want to offload and they say, hey, I'm done being down 25% or whatever. I just want to get out. And so that's a lot of sell range for buyers to pick up. So it's going to take some time. Now, Bitcoin's transfer volume cools by 50%. 7-day moving average for on-chain transfer volume have dropped by about 50% to 660,000 Bitcoin on Thursday from 1.36 million Bitcoin less than 30 days ago. So a lot of people were moving a lot of Bitcoin a month ago. Now it's kind of dropped. Not a lot of volume there. So 30-day spot relative volume across all exchanges muted below 1.0, significantly lower than cycle peaks seen in the last bull market. The divergence further underscores the lack of speculative intensity required to drive prices higher. So people are not just randomly smashing the buy button out of pure speculation, right? So it seems like right now we're at this point where we're just moving slowly, slow crab walk up to the right. And I think that's fine, honestly. So if we did see some big giant smash back up, I think that would be sold into pretty quickly. So it looks like it's going to be a nice long grind sideways slash up, hopefully, and not a long slide back down. So a clear expansion of volume would signal stronger conviction and a healthier foundation for continuation. I agree. Now, last thing, two more things on Bitcoin, then we'll shift away from there. But 90 grand is Binance data shows a surge in aggressive buying. So that's good that buyers are starting to step in here. So Bitcoin builds a bullish structure. The latest rally saw it reclaim important key support areas, including the $68,000 zone where the 200-week exponential moving average and the 50-day simple moving average converged. So we held that. That's great. Bitcoin breaks through the crucial 71,000 level and builds a bullish structure. Michael Van Pop said on a post on Wednesday. That would strengthen the entire theory of higher lows, higher highs, and continued momentum upwards. So next stop, if we get there, hopefully around 80 to 84,000-ish. So from a technical perspective, Bitcoin is validating a symmetrical pattern triangle, a symmetrical triangle after breaking above the upper trend line at 70 grand on Tuesday. So yeah, we're moving there. Hopefully this breaks up and we get back up to there. Big move up to 90 would be lovely. The daily relative strength index, RSIs, increased to 56 from oversold conditions at 15, reached on February 6th. That was the bottom. That's when we had this huge nuke down. So it's slowly been moving back up. As Cointelegraph reported, maintaining above 69,500 in the near term is crucial for the bulls to sustain recovery. Now, the bulls are buying aggressively. Binance taker buy volume, which measures the total dollar aggregate amount of aggressive buy orders, market buys, instead of limit orders, placed by traders on Binance futures, increased by 2.7 billion within 2 hours following the U.S., Iran, and ceasefire agreement on Tuesday. So a lot of people hit the smash the buy button on just that news. So if this thing resolves, the market's telling you it wants to go up. Bitcoin, crypto specifically, it wants to go up. It needs to get past this in order to do so. So the moment that this thing eventually resolves, I think we start moving upwards in a big way. We've just got all this overhang kind of hanging over us. So this sudden improvement in visibility allows investors to reposition in the short term and sends a constructive signal for Bitcoin. So you can see here, boom, we just ramped, right? The Binance Bitcoin cumulative test taker volume has climbed to 1.02 billion, its highest level since March 17th, signaling a sharp return of aggressive buying. This suggests Binance traders were aggressively buying into improving macro sentiment, not just reacting to a crypto-specific headline. So you can see here we did this huge run up, which is great. Meanwhile, Bitcoin's Coinbase Premium Index has flipped positive, pointing to a return in demand from U.S. investors. So look at this. And a lot of this, the Coinbase Premium has to do with institutional investors. So you can see bearish, 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 underwater, 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 and then boom, we're finally back in the green here. So pretty ugly March there. And with that said, March still eked out just a tiny, tiny green candle. So, worth mentioning is that if we look at our monthly candles, we finally had the weakest of green candles, ever. But 1, 2, 3, 4, 5, we managed to turn it green. So hopefully we get at least 1 or 2 more green candles here if we roll back over. All right, now, last thing kind of about inflation. So US PCE inflation is this individual trader keeps an 80 grand Bitcoin price target. So the PCE data avoids surprises for risk assets. That was really good to hear. Relief over the U.S.-Iran ceasefire combined with favorable readings from the Federal Reserve's preferred inflation gauge, the Personal Consumer Expenditures Index. Core PCE year-on-year came in at 3% for February on a monthly basis. Core PCE was at 0.4, so that's much better. Trading resource, CoBSE letter noted that the impact of the U.S.-Iran war and oil supply squeeze were not yet reflected in PCE. So remember, these are all old data points. This marks the final pre-Iran war PCE inflation data point. So, if we look at that and look at how far behind this data is, we can look at Brent crude. Sorry, this is monthly. If we look at this, that's probably going to be around here, right? So oil is definitely going to crank up in the next couple of readings, which is so stupid. This just goes to show you that they should be using Trueflation instead of their own metrics, which are months behind, which is just sad, right? They're making financial decisions based on history back here versus where we are today. It's an absolute, mess. So while PCE inflation is widely regarded as the Fed's favorite measure, the bigger inflation focus this week will be on tomorrow's CPI data, as PCE covers February and not March. So So the question here is, will we push to 80 grand, and is that on the horizon? On the high time frame, some upside low leverage liquidation clusters have been cleared, but sizable liquidity still remains around 73,000 and above the highs near 76. Meanwhile, liquidity is starting to build to the downside, mainly around 69,000 and 64. So if there's going to be big liquidation targets, those are the ones. So with price still range bound, both sides remain in play. If the 69 to 68,000 level holds, price is likely to push higher and target the remaining upside liquidity is 73,000. So you can see here on this, we've got some down to the downside here, but boy, oh boy, do we have big targets up to the upside if we push to 73. Now, back to Michael Van Pop. Optimistic, keeping 80 grand in play. As long as Bitcoin continues to hold these ranges, there's a strong new upwards leg on the horizon towards 80 grand. We kind of covered this in the last slide here. And, this is still 5 days behind, but Trueflation is still showing under 2 by a long shot. So that's good that we have this big crank up here that does reflect the Iran war, right? And then since the Strait issue has at least paused a bit, we've got a little bit of relief there. So let's talk about Clarity Act because we're still dragging on. This thing never seems to end. So Bessent ramps up the pressure on Congress to pass the Clarity Act. We've been talking about this since, we were hoping to get this thing across the board in October of last year, and then the government shut down and dragged ass. So Bessent warned that with global crypto market rising to $3 trillion and nearly 1 in 6 Americans holding digital assets, the stakes for U.S. leadership and financial innovation are higher than ever. Quoting him, quote, to preserve it and rise to the challenge before us, Congress must pass the Clarity Act. Senate floor time is scarce, and now is the time to act. Traditional financial institutions have warned that on their side of the fence here, stablecoin yields could significantly reduce bank lending. Tough shit. Compete or die. That's capitalism. While industry advocates argue that they are essential to unlock innovation and keep the U.S. competitive. I agree. The banks are just trying to say it's not fair instead of saying, well, we could just offer the same thing. They just don't want to change. They don't want to adapt. So the White House supports stablecoin yields. We know this. The Council of Economic Advisors estimated that banning stablecoin yields, get this, would lift total U.S. bank lending by only $2 billion, which is nothing. So by banning this yield that they're dug in on, the estimate is they'd only get 0.02% of the $12 trillion market, with community banks gaining just a $500 million, which is nothing. On the other hand, they found that such a ban would impose an $800 million annual welfare loss per year due to lost yield for users. So if they just keep getting dug in, we don't get this passed, basically us, retail, in our bank lending, we get screwed to the tune of $800 million, whereas community banks and so on get $500 million or $500 million. So ridiculous. So the Treasury, on top of that, proposes stricter AML rules for stablecoin issuers. On Wednesday, the Treasury proposed new rules under the Genius Act, requiring payment stablecoin users to implement anti-money laundering and counterterrorism financing programs, which is what, bringing it all the way back, surprised me that Iran was using Tether. Now, granted, they're not a U.S. Stablecoin issuer under the Genius Act, but their aim publicly is that they do want to. They do want to become that because we're the biggest market in the world and they make a lot more money. So, side note, Tether is essentially going to split. They're going to do a U.S. only stablecoin, and then they're going to do the other current, existing everybody in the rest of the world stablecoin. So the U.S. continues to just be stupid about this. Anyway, industry experts say the move effectively turns stablecoin issuers into bank-like gatekeepers. Sneer Levi, CEO of blockchain intelligence firm Nominus, told Cointelegraph that compliance could lead to significantly more wallet freezes, transaction blocking, and asset seizures at scale. I don't like this. I want a stablecoin that is truly decentralized. I mean, we have a handful. They're just not really quite there and yet for prime time yet. But, the allure of going mainstream for, returns, investors, so on and so forth, I get it. They're going to eventually have to do this. But, I think that's going to make things like Bitcoin become even more valuable because it still can't be seized and stopped and all that kind of stuff. Now, Fed minutes cracked the door to further rate cuts, but also possibly additional raises, just depending on how things go. So on Wednesday, the Fed released minutes from its last meeting on mid-March, with the meeting ended with an 11-1 vote to keep rates steady. Amid a risk of further conflicts, official consensus pointed to a potential rate cut this year, but as Fed officials noted in the minutes, only if inflation does not get out of control. So the Fed fear of inflation is just unbeatable, right? At first, it was we think that tariffs are going to cause inflation, and then it didn't, and then we're just scared that we're going to get this wrong, and then it's just one thing after another. Now it's this conflict, so I get it. I think after botching it so terribly from 2021, well, really 2020 to 2023, they're just really, really gun shy about screwing it up on the upside again. So cuts are still possible, but so are hikes. Quote, some participants judged that there was a strong case for a two-sided description of the committee's future interest rate decisions, reflecting the possibility that upward adjustments to the target range for the Fed fund rates could be appropriate if inflation were to remain at above targets. However, they're also concerned about, in the current situation of low rates of net job creation, labor market conditions appear vulnerable to adverse shocks. So they're kind of stuck, right? If inflation ticks up, then they could raise rates. But if they raise rates, jobs are going to continue going down, right? If they drop rates, inflation could tick up, but then jobs are going to go up, or yeah, vice versa. So they're kind of stuck between a rock and a hard place here. I think they just need to let the market do its thing. Now, a couple more things, and then I'm going to pass you back over to Brett. Since we're talking about Zcash and M3 quite a bit, I figured I'd just read this too. Zcash leads a U.S.-Iran ceasefire rally with 30% gains. Is this a bull trap? So just be cautious here. Zcash rallied after Trump announced a 2-week ceasefire with Iran, leading to gains in the broader relief across global asset risk markets. This could risk becoming like a 2021 style bull trap. Privacy coin rose 30% in the last 24 hours, its highest level since January. Zcash's latest rebound is starting to resemble a setup that followed its 2021 peak. Back then, it entered a prolonged bear cycle after peaking at near 392. So you can see we've got this bit of a move here. The current setup looks similar. Its 0.236 fib level near 197 is acting again as strong support, while descending trend line continues to cap upside attempts. So we've just got this tip, 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 right? Reject, 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 and then blast down, and then reject, reject, reject. So we'll see how that goes. Continued rebound could lift Zcash towards its 0.5 Fibonacci retracement level near 370, which also lines up with the descending trendline resistance. But the rally could lose steam if bulls fail to break above the trend line, raising the risk of a pullback towards the 197 to 200 support zone. Conversely, a decisive breakout above the trend line may trigger a falling wedge breakout setup, which the measured upside target is around $1,200. So if this thing actually breaks above this, well, then it's party time, right? So it just kind of depends on where that goes. Now, the Zcash liquidation data raises downside risks as well. For instance, Binance's Zcash contract may see 3.8 million worth of cumulative short liquidations if the price rallies above 380 in the coming weeks. So remember this number, 3.81 million. However, 50 million in long positions will be wiped out if the price drops below 260. So way more liquidation to the downside than the up. Now, heat map also highlights 305 to 306 is the largest single liquidation pocket with about $1.76 1.76 million in leverage positions clustered in just that range, which makes an important near-term level to watch as well. So if we drop back down, that's a big liquidation target right there. So just worth looking at. Now, I'm not going to read too much into this. The headline just made me laugh. Just be careful. Don't play with fire here. Never put massive leverage on shit coins, quite literally. Trader loses 3 million as leveraged fart coin positions unwind on hyperliquid. This was pretty crazy. So the price of Fartcoin collapsed. I think it said it was 50%. If I remember reading this elsewhere, I don't think I highlighted the rest of it because I didn't want to go too much into Fartcoin. But just kind of worth mentioning here. If we look at, let me see if I can look this up just for funsies here. And while I'm doing that, let me get to this first. So as we talk about quantum cryptography and quantum computing, I thought this was pretty interesting to see. So something would have to happen here for Bitcoin to be able to utilize this, namely a soft fork. But I thought it's cool that the developers are already working on something that could be put into place even before a much bigger fix. So Bitcoin gets its first working prototype of a quantum-resistant wallet rescue tool. So it wouldn't necessarily make it quantum proof, but it would be able to save your bacon if someone tries to crack your wallet with quantum computing. So the system would let users of the vulnerable Taproot and other modern wallets prove they have created a wallet using its secret seed without revealing that seed, providing a backup way to access funds if traditional digital signatures are disabled. So let's get into this. A top Bitcoin developer says he's building something the community has debated for years but never actually prototyped, a way to rescue ordinary wallets if the network is ever forced to defend itself against a quantum computer. The tool targets a specific and uncomfortable flaw in Bitcoin's long-term defense plan, a widely discussed emergency brake upgrade designed to protect the network from quantum attacks, but could also lock millions of users out of their own wallets. One leading proposal, known as BIP360, was merged into Bitcoin's Improvement Protocol repository in February as a draft. It would give users a new quantum-resistant type of wallet to migrate their funds to ahead of any threat. Now, that's the bigger fix. That means, okay, we're quantum-proof now. But migration takes time, and not everyone will move in time. So, it's going to take a while for them to get this approved by the community, for wallets to upgrade, for nodes to run the new version, so on and so forth. So if this happens before that, this is kind of an emergency fix. So every Bitcoin transaction today is authorized by a digital signature. The signatures are exactly what a quantum computer will be able to forge. The emergency brake would shut off Bitcoin's current signature system network-wide before an attacker could start draining wallets. Think of this as cutting the power to the locks when you realize the keys have been copied. The problem is what happens to everyone who's still inside. Most modern wallets, especially the single-user Taproot wallets introduced to Bitcoin in 2021, and have very common, rely on that signature system and have nothing else to authorize spending. If it gets switched off, those wallets have no way to prove ownership, aka your coins are stuck. The coins inside them would be stranded, untouchable even by their rightful owners. That's a problem. The same upgrade designed to protect users could also now freeze them out permanently. So this developer, his system lets a user mathematically prove they were the one who originally created the wallet using the secret seed that every Bitcoin wallet is generated from. Crucially, this proof doesn't require revealing the seed itself, so using it to rescue one wallet doesn't compromise any others derived from the same seed. In effect, it replaces the I can sign this transaction with the I can prove this wallet came from me. That's pretty amazing. Right now, there's no formal proposal to add it to the Bitcoin blockchain because he just developed this thing. No deployment timeline, and the developers remain divided on how urgent the quantum threat really is. But the heroes are on the job. So I thought that was pretty good. A couple more temperature readings, and then I'm going to pass this over to Brett. Something worth mentioning here. If we look at fear and greed, just last week, when Bitcoin was at 65,000, fear and greed was at 8. We have been in extreme fear now, I believe, for like the longest in Bitcoin's history, I think. If we look here, yeah, 30, I think it's been at least a month, which I don't know if Bitcoin's ever, I can't remember, like, well, maybe it's just been since January. I can't remember exactly where this ticks off, and I don't remember where this was. I covered this in the Moonstream webinar on Tuesday. I don't remember the exact date, but yeah, it's the longest run. Maybe it's since, in January. We've had the longest run of Bitcoin being in extreme fear. So if there's going to be a bounce, boy, it should be soon. That's just when this would probably happen. And then crypto fear and greed ticked up to 47. Alts had a little bit of runs. People are getting excited. Of course, this looks like, a problem to me, but we'll see how that goes. But we'll kind of see. As far as this, I don't think there's really any chance of a Fed cut until maybe late in the year. So not a whole lot going on there. But, overall, I'm happy to see Bitcoin have this run back up to 78 and not fall off a cliff here. Or excuse me, 72. I'm really glad to see that this held. That's the most important thing for us right now is the fact that this held. And if we can continue holding this, well, then, folks, it might be time for a turnaround. I don't think it's time for like a massive, crazy bull run, but we can start building the floor here instead of just continuing to collapse down. So it gives me a bit of hope here that things look like they could turn around, in a good way. So that's all I've got for you now. I'm going to pass this back over to Brett if he's here and let you go from there.